Hi, I'm Eddie Sanaji, and welcome to Your Finance TV's Crypto Revolution, covering all things crypto and digital assets. And Adam, welcome back. There's always something to talk about in the world of crypto.
Always something to talk about, Mehdi. And today we're going to really get kind of deep into Bitcoin.
You gave it away. I was about to say this was a special show. We were going to do something different today. But before we get into it, don't forget, like and subscribe. We're through 5,000 followers, so I appreciate all your support. So stay on top of it. Keep clicking. But Adam, so as you've given away the lead, we are going to do something a little bit different this week. We're going to talk about Bitcoin and not the peripheral stuff, but more just about Bitcoin. So, Adam, I know that this is a topic near and dear to your heart. So why don't we dive right in and let's talk about like the fundamental investment thesis surrounding Bitcoin, whether it's today, last week, a year ago. What makes people interested and why should people be looking at Bitcoin as an investment idea?
Well, obviously, Mehdi, they should be looking at it because they want to get a Lambo and they can, put a couple bucks into it and be a billionaire tomorrow, right? That's the obvious reason. But
Is
let's
it
go to some
2011 already?
right. Yeah. If I could get in my time machine, which is a Lambo, by the way, and go back to 2010, 2011 and start buying a whole bunch of it, that's the reason. But we're not at that point right now. I don't have the time machine. And therefore, we have to look back a little bit and talk about what some of the investment theses are. Now, keep in mind, I usually break these down into three different investment theses: the revolution, the macro, and the micro, right? And we have to remember where Bitcoin started. Where Bitcoin started was coming out of the 2008 financial crisis, this idea that I want or I need to have some sort of way for you and I to transact financially without having to ask the permission of a bank or a government, right? I need to be able to create money, something of value that you and I can trade. And I don't want to have to ask Chase or Bank of America or Deutsche Bank or something if I can send you that money. And I don't have to ask their permission. I don't have to go ask them, did Mehdi get the money that I sent him? So that's kind of where Bitcoin started, right? Was this kind of revolutionary money, this idea that you and I need to be able to transact without going through the banks. Because remember, in 2008, the banks were the ones who took our money and were pretty fast and loose with it, went really risky so that they could make more, and they ruined the world economy. At the time, we had the Great Recession, the mortgage meltdown, whatever else we want to call it, the Big Short, all of those things came out. And that's the Bitcoin, the revolution. So from a revolutionary perspective, some people want to invest in Bitcoin or hold Bitcoin. I don't even know if it's investment. They want to hold Bitcoin because they go, I want to have something such that I can transact financially, that I can hold it. I can be the custodian of my own asset, of my own thing of value. I can exchange it with whomever I want in the world, anytime, settle it instantly without having to ask a bank. And the value of it is not based on the Fed or the central bank of other countries or the euro or anything like that, European Union. The value of it is going to just be based on the market. And so that's really the revolutionary aspect of Bitcoin. And the reason why I go into that, I know it's not necessarily a full-on investment topic, but as we move forward in this discussion, we'll discuss why that's important, why that's an important reason for investing in Bitcoin.
So, Adam, you're kicking off with the part that doesn't really make you enough money to get a Lambo. It's purely because it's a store of value, transactional, and it's basically you're disintermediating the banks and the traditional financial institutions.
Right. You're just intermediating the banks and the governments, right? This is, I
Absolutely.
can hold this. If I have my Bitcoin on a hard drive or a hard wallet, I can literally go anywhere in the world and my Bitcoin is with me. If I just know my seed phrase or my private key, and I know I'm getting into some topics that some people might not understand, but if I know those, then my money is always with me, right? That's a big deal. It's not as big a deal here in the US. It's a bigger deal elsewhere in the world that my money is wherever I am. And so the early proponents, the early Bitcoin miners, the early people who used it, oftentimes that was the reasoning, right? It was, I think this will be important because I don't like what governments have done and are doing with money. I don't like what banks have done and are doing with our money. And so That's why they wanted to get into it early. They didn't get into it thinking I'm going to be a billionaire one day. They got into it thinking this is different. I don't like what's been happening in the past. A lot of them obviously very libertarian, very much like I don't, I'm against what the government's doing, or I'm against what the banks are doing. I don't want to be held hostage by the capitalist banks, and therefore I'm going to invest in Bitcoin.
And Adam, that was also a very a topical conversation, because for years and years, and especially during the financial crisis, we've all joked about, oh, you should just keep your money under the mattress, or keep your cash there. There's no need to use these banks; they're all crooked and yada yada yada. And it was also during a period of extremely low interest rates where no one was making any money on their money anyway. So people would rather feel happy stuffing under the mattress, or maybe taking a flyer at using something new, the new mattresses, which is ultimately Bitcoin.
Exactly. And so, if we start moving forward, Maddie, we look at some of the properties of Bitcoin. And now I'm talking about Bitcoin, the cryptocurrency, not Bitcoin, the network. But some of the properties of it are things like there will only ever be 21 million of them. That's a really big deal, to the early adopters and to people who are investing now, because there is a finite supply. And if we look at an asset that I might want to hold because I don't trust what the government's doing, or I don't trust what banks are doing, and then I look and say, oh, well, governments are just printing money. They're keeping interest rates arbitrarily low for quite a long time. That's likely in the long term going to have a pretty negative effect. I want to be holding an asset that I know it has a fixed supply. And in the case of Bitcoin, a verifiable fixed supply. Gold, we kind of know how much there is, but we kind of don't. We could go find more gold if we wanted to. We could go bring more gold out of the ground. Gold is not that easy to transport around. I can't just hold it on a little USB stick and walk around with all my gold, nor can I pay for things with gold very easily. Bitcoin, on the other hand, we know exactly what the supply is. We know exactly where it is at all times. I can verify for you how much I have at any one point. And those that are investing in Bitcoin as a store of value, or as a hedge against what they see as inflation coming because of all the money printing, because of the low interest rates, they are investing in Bitcoin as this store of value, as a place to park their wealth, to park some of their assets for a while, knowing or having a feeling that there will be inflation in the future, right? So because Bitcoin has a finite supply, the value of it should go up equal to or greater than inflation. And therefore, when things cost more for me in the future, I can sell some of my Bitcoin and pay for whatever I need. Now, that's you and me talking about it. The billionaires that are buying it, or the billionaires that have become billionaires because they own Bitcoin, it's a little bit different, right? They're huge macro hedge fund investors that are going, we're going to need a store of value, and therefore I think that this might outpace things like equities, or might outpace debt or something like that. They're looking at this as a store of value, a place that we've looked at gold in the past. Now they're looking at Bitcoin because it has some of the same properties. It has a pretty fixed supply. We pretty much know a lot about it. The difference with Bitcoin is it's extremely liquid. I can take it with me wherever I want to go, and I can verify it.
So Adam, thank you for breaking that down. I kind of see this segment going with three portions to it. And I feel like you've addressed the first portion of it, which is kind of, why would I look at Bitcoin as something to invest in yesterday? All right. So we've kind of broken down the reasoning behind that. Now I'd love to address, why would I invest in Bitcoin today? Right. Which is obviously builds on yesterday's conversation. And it kind of brings us into like a macro universe and a macro thought process on the bigger picture on what's happening today in the world. And there's a few things happening in the world. So obviously we have rates are rising. There's geopolitical tensions and globalization. You mentioned inflation. Obviously that was one investment thesis yesterday. But now talk to us today on how these factors fit in with the investment thesis around Bitcoin.
Okay, so really important to point out, one, which we probably should have said at the beginning, we're not giving investment advice or financial advice. I'm not telling you should invest it. We're going through what the theses are, and what is setting up for the possible growth in the value and the price of Bitcoin. So the question now that you asked is, why would I invest in Bitcoin right now? And if I look back, obviously, at it at Bitcoin as a store of value, as an inflation hedge, as a revolutionary new monetary tool, and then I look at what's happening today, we have seen inflation for the first time in 20 years. We've seen interest rates actually rise significantly from where they were being held arbitrarily low for 15 years. What is that going to do? It is going to mean that in the near to distant future, everything that I buy is going to cost more dollars, right? There's more fiat currency. There's more dollars, euros, yen, everything else in the world than there was years ago. There's not that much more Bitcoin. So everything that we thought might happen is actually happening from a macro level. And so that's where the investment thesis on a store of value fits in. It's inflation, it's higher interest rates. What do higher interest rates mean? It likely means that equities aren't going to grow quite as fast, right? Because if I'm deciding where my money is going to go now, and I can choose the stock market or something that has a fixed supply, and I know that those companies that are part of the stock market have been getting fat and happy on low interest rates, borrowing money, stock buybacks, all those things. And now they're not going to be able to borrow cheap money anymore. Now we're seeing commercial real estate, prices fall. We're seeing residential real estate prices fall. All that value that people build up is starting to come down. Where else are you going to put your money? Right? You're going to put it in something that doesn't have those issues, right? Has a fixed supply, a fixed verifiable supply. So all the things, all the theories that we had for years are actually coming true right now, right? And it's the monetary policy of the US, it's the monetary policy of the EU and Great Britain and China and Japan and everywhere else that was just printing money, lower interest rates. And now it's led to inflation. It's led to higher interest rates. It's led to probably a fall in real estate prices, probably a fall in equities, probably some sideways movement for a while. And that's where you see something like Bitcoin can come in. So from a macro, what is actually happening, not a theory, what is actually happening, those things are happening. And then we can couple that with wars going on, wars that are going to cost a lot of money, wars that from if we look at Bitcoin, the revolution, it's people in those countries that are fighting have openly said, we're putting our money into crypto because we're not sure if the bank's going to be open tomorrow. We're not sure if we're going to get there. We're not sure if we're going to have to leave in the middle of the night with our family and our money has to go with us, right? We're not sure who's going to be running our country tomorrow. Those kinds of things are important in the idea of the revolutionary aspect of Bitcoin. They're important in the macro factors as to why I would invest in an asset like Bitcoin, because the value of things like commodities are likely going to go up in price. Bitcoin can be viewed as a commodity in that respect. It has the fixed supply with inflation, higher interest rates, probably lower equity growth than we've seen recently. It's an investment from that perspective on kind of a micro level. Where does it fit in my portfolio? Why would I invest in it today? And those are just some of the reasons. And then we can get into even more of the kind of micro, what is actually happening with Bitcoin, not what's happening in the world, but what's actually happening with Bitcoin.
Well, I think you've encompassed that macro picture very clearly and very nicely. And I just kind of want to even simplify it even further. Just the thought that if you're in one of these situations in one of the countries which is under in war and going through fighting and such, as you said, you don't know if the bank's necessarily going to be there tomorrow, but the ease and ability to be able to walk off with a thumb drive. You have 10 thumbnails, but you could have your thumb drive with your net worth, and you can go to another country, a neighboring country. If you can get out, you can do something. You know that one thing, as bad as everything is going on a geopolitical basis around your situation, at least you can leave with some element of your financial standing and such to help you set up or establish you in another country, wherever you might be. Whereas to suddenly lose everything, olden days, you would have immediately gone, let me grab some gold or convert to gold if I can. As you say, it's heavy, clunky to walk around with. You get border stops, you can get yourself in trouble. Like there's so many different things that fight against you in these types of situations. This at least allows someone a little potential peace of mind in being maintaining some of their financial stability.
Yeah, and look, we talk about these war-torn countries, and people might be listening to this going, okay, like how many people are really there? How much money is really there buying Bitcoin? But we can look in our own country. We can look in the US, we can look in the West and go, look, a lot of people here, we don't trust our leaders. We don't trust the Fed. We're not quite sure what they're doing with our money. They keep telling us everything is fine, and it's not necessarily fine. Already, this earlier this year, we had several banks collapse, right? I mean, that's where we would normally store our money. So we have, financial revolutionary issues here too. They're not quite as pertinent because we still have the dollar. The dollar is still the dominant currency in the world. We still, have a government that's going to support the banks. However, there are plenty of people here that go, look, I need to have some of my assets in something that is not dollar denominated, that is not custodied at a US bank. And therefore, I want to have something like crypto Bitcoin that I can hold in my own wallet. I can maybe move it to another jurisdiction, another geographical location that has different regulations. And that's not as easy to do with fiat currency. It's easier to do with crypto or Bitcoin.
So, we've now examined yesterday, today. Let's have a look at tomorrow. And I think tomorrow kind of almost brings away from the macro, brings things down to a micro level, right? So what are the next catalysts that we kind of see upcoming for Bitcoin that would make a reason for investment for tomorrow?
Okay, so we talked already about the supply cap, right? There will only ever be 21 million Bitcoin. And so a few of the things that we see are the potential for a spot Bitcoin ETF approval here in the US. And when I say a spot approval, I mean probably 10, right? Because once one gets approved, there's going to be 9 or 10, however many applications. Then, Mehdi and Adam can throw their hat in the ring and create our own spot ETF if we want to. It'll probably be that simple. But that is going to likely drive a tremendous amount of demand for Bitcoin. If there's $1 billion, $2 billion, $3 billion that flows into those funds, the difference in those types of spot ETFs versus a futures ETF, which we already have, or versus something like GBTC, which we already see, is those ETFs will have to own enough Bitcoin to support the value of the funds flowing in. So if there's $3 billion coming in, they have to go buy $3 billion worth of Bitcoin. There is only so much Bitcoin in the world. Many people, the likes of Satoshi, the likes of Michael Saylor, the likes of Coinbase, like they're not going to go sell their Bitcoin necessarily. They're holding it on to it for the long term. So these ETF companies, BlackRock, Fidelity, Wisdom Tree, Franklin Templeton, they're going to have to go buy whatever's available that someone's going to sell. And when there's a very limited supply, and it's even more limited than the 21 million, it's going to be extremely limited. Maybe 20 or 30% of Bitcoin in existence will actually be available to them to buy. Well, then the laws of supply and demand say the price will have to go up. They actually are going to have to hold the Bitcoin to support the demand for their funds, and therefore that will naturally move the supply up. Not only that, but an ETF approval gives all sorts of regulatory thumbs up to everyone that says, okay, the US government says this is okay, right? The US government has, the SEC at least, which has been the most staunch opponent to anything crypto related, has given it the okay. It's going to mean that financial advisors are going to be putting in client portfolios. More clients are going to want to own it, or more investors are going to want to own it. More institutions are going to get involved, even if they don't buy the ETF. They're going to go, now that it's okay, we're going to go buy spot Bitcoin. We're going to go own it in our own wallet. You're going to see more people in retirement, putting it in retirement plans and such. So $3 billion in inflows to ETFs could be $5 or $6 billion into Bitcoin, which again, the limited supply we talked about means that the price just has to go up.
Very interesting value proposition on that investment side. Adam, talk to us. So we have another catalyst upcoming just on the micro front. So we've discussed the ETF side. What about the halving? So this is something that investors are always talking about, and what it means, what the implications are, how frequently this happens. And I believe the next one is April 2024, which is pretty much around the corner.
Right. So really close, all this, again, lining up kind of perfectly, right? We have all these macro factors happening in the world. we have a potential spot ETF approval, and then we have what's called the halving or the halvening, which is going to happen in April of 2024. And according to the Bitcoin monetary policy, which is set forth in the Bitcoin code, which just happens, right? It was code that was deployed back in 15 years ago and continues to keep rolling forward. It says that in order to get to that 21 million number I keep talking about, every 4 years, the amount of new Bitcoin created gets cut in half. Right. So currently, every 10 minutes, we create 6.25 new Bitcoin every 10 minutes currently. Starting in April of 2024, so I don't know the exact date, but sometime in April of 2024, that number is going to get cut in half. There's going to be 3.125 new Bitcoin created every 10 minutes. So if we go back to our talk about the ETFs and demand and such, there's not going to be as much new Bitcoin available for the ETF companies, for the market makers, for you and I in our retirement plans and such to buy. And if there isn't someone willing to sell it to us, then the price is just going to have to go up until someone is willing to sell us or sell the funds or sell the institutions or Bitcoin. So when we have a kind of a supply shock like that, which is the new supply is getting cut in half, that has always tended to significantly increase the price of Bitcoin. We can look back over all the previous halvings. It started out as 50 new Bitcoin every 10 minutes. Then it was cut in half to 25, and then 12.5 and 6.25, and now 3.125. And every time the price shortly before and shortly thereafter has increased significantly. And it's because there is increased demand and the supply goes down. The new supply goes down. And so again, you put everything together in a nice, neat little package. And it seems like this is the time. This is what we're looking at, is if you and I are going to invest in it, seems like with all those theories and theses and happenings, this is a pretty good time to do it.
I appreciate that. So I think, I really appreciate you breaking things down. I think we've done a lot to cover yesterday, today, tomorrow in the different whys and why should you look at this. And obviously this isn't investment advice. This is just for educational purposes on what makes sense and why people are looking at investing in Bitcoin. No one's telling you to buy or sell anything, just to clarify on that side. But we just wanted to go and educate on why people are doing this. And it's not just some flippant thing that's being thrown around at a cocktail party. So, Adam, thank you very much for sharing your thoughts on that. And obviously, I want to urge our viewers to make sure that they check out your course, where you break things down on not just Bitcoin, but other crypto assets, your course on digital assets and crypto education, available at interaxis.io. So, Adam, thanks again for sharing your thoughts.
All right. Thanks for having me on, Mehdi. Love talking about it.
Until next time, thanks for watching and good luck investing.